Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's episode, I'm actually taking an entire interview with Robert Breedlove from my second channel, the Whiteboard Finance Show, and I decided to put it on the main channel because it's a very important topic, and that topic is simply, what is money? So when a lot of people think about money, they really don't even know what they're thinking about because they haven't taken the time to learn about it. And I think once you really go down the rabbit hole of understanding what the current monetary system really is, that's when your horizon and investment theories and philosophies really start to expand into other categories. So I think a lot of the stuff that we're going to talk about may sound a little bit out there, but I promise you, if you've been a student of money for any extended period of time, you'll know that everything we're talking about is absolutely true. So it's open to criticism. Please leave some comments down below. But other than that, please enjoy. Thank you. Hey everybody, welcome back to the Whiteboard Finance Show. Today's guest is Robert Breedlove. Robert is I guess he's a Bitcoiner, but really, in my opinion, he's more of a philosopher than anything. I've been reading and watching his material for about a year now, and it's an honor to have him on. Thanks for coming on, Robert.
Hey man, thanks for having me. Glad to be here.
Yeah, it's a pleasure. So the first introduction to you came from your Masters and Slaves of Money series on YouTube, and that came in a written format first, but then you recorded it, put it on YouTube, and I just went down the rabbit hole. And it's funny because it confirmed a lot of the stuff that I already was learning about since 2008, basically. So my background, I have a finance degree, graduated in 2010, huge, great financial crisis, and that sent me down the rabbit hole of trying to understand what is money, a lot of things that you talk about, and also the fiat and fractional reserve banking system. So for the listeners here, do you mind giving a Reader's Digest of that Masters and Slaves of Money series to start the podcast off, if you don't mind?
Yeah, sure. I don't know that the subject matter lends itself super well to Reader's Digest, but I'll try and cover the highlights.
Yeah, these videos are
So,
hours long for people that don't know. So to ask for a snippet is kind of unfair, but we'll try and figure it out.
yeah, so it started out with the written piece itself, and I guess the idea for it came to me after kind of a confluence of different things. So one was I had read the book The Bitcoin Standard by Safadine Amous, which is a really excellent book on Bitcoin. It's the first 2/3 of it are just going through economic history, and then Austrian economic principles and thought before it gets into Bitcoin at all. So that it gives you this really foundational knowledge about economics before it describes the significance of Bitcoin. So that was an important book. And in that book, one of the ancient monetary systems he explored were the agri-beads of Western Africa, and how that. Basically the short story there is that Western Africa in 16th century was using these small decorative glass beads for centuries as money. And once Europeans arrived, they realized that they could mass produce these glass beads or counterfeit them. Like back in Europe, they had superior glass making technology, and they could ship it into Africa and use it as essentially counterfeit money to buy goods and services. So that's exactly what Europeans started to do. They started to pack holes full of glass beads, sending them on expeditions into Western Africa and using them to buy all the goods and services. And there was the locals resisted a bit. Sometimes I could tell the difference between the authentic agri bead and the counterfeit or manufactured European agri beads. And there was kind of a cat and mouse game. The Europeans would try to step up the authenticity. And just like we have today, we have counterfeit money operations. They're always trying to outcompete the government. So all the little strips you see in the dollar bill, those are anti-counterfeiting measures. And that's constantly a cat and mouse game. People are trying to out counterfeit the issuer and vice versa. So long and short, Europeans used that this counterfeiting operation essentially to steal vast sums of wealth from Africa over, I think it was actually hundreds of years. There's just a slow motion plundering of the African Commonwealth. And I give some other examples as well. There was one by the Portuguese where they had done something similar with the Panos. And the moral of that dynamic that I was trying to get across is that if you can counterfeit money, then you are able to steal the time of the people using the money. That's basically, you could think the opening line in the piece is money is a tool for trading human time. So if you can, it's essentially an instrument for emblematizing time in the marketplace. That's what we sacrifice our time to obtain money. We then redeem that money for commensurate sacrifices of time from others. That's what money is. If you can artificially produce money that no one else has access to, then you all of a sudden can acquire the labor, time, effort, energy of others in the market at an unfair price. Mm-hmm. Said differently, you can steal human time by counterfeiting currency. So that's a really important point. And for lack of a better term, in what you would call time theft, when you're stealing time from people, I refer to it as slavery. I don't know. It's not to say that there's a worse degree. There's degrees of this slavery, right? Where you have outright physical bondage, where you're putting people to gunpoint, putting them in chains, whipping them, et cetera, et cetera. That's a form of slavery that burns itself into our consciousness more easily. But this currency counterfeiting being a much less visible form, right? It's hard to see it happening over many hundreds of years, where there's just currency being counterfeited and wealth being stolen over time, allows it to be perpetrated at a much larger scale. So the slave beads in particular, they became known as the agri beads became known as slave beads eventually. Mm-hmm. And they directly led to the transatlantic slave trade, which was a 365-year atrocity. In the piece, I actually quantify kind of the working hours of the average slave and calculate how many hours were stolen over that period. And it's a staggering number. I think it's 6.8 billion hours stolen per year for 365 years straight. Came to a total number of, I think it's over 2 trillion human hours stolen.
Unbelievable.
All from counterfeiting the currency, rooted in counterfeiting the currency. And again, then once Europeans had impoverished African locals by counterfeiting currency, that's what allowed them to start acquiring slaves directly, right? They actually started to buy, people would sell themselves or their family members or others. There was already slavery in Africa, but they would now sell these slaves to Europeans, and Europeans stole, it was 12.5 million lives directly. And this does not count at all the people born into slavery. So clearly when you steal slaves, you send them to America or Europe, their children are born into slavery and so on and so forth. So it's even more repercussions beyond the direct theft of human life and time. Mm-hmm. But it's an atrocity, basically. And it's rooted in this technological shortcoming of the money, and that it can be counterfeited, essentially. And then I tie that into, so the main theme there is that currency counterfeiters are slave masters at some point. They can steal human time in perpetuity. And then I tie that into modern central banking, which is the same thing. It is a legal monopoly on currency counterfeiting. A line that recently really resonated with a lot of people, I think this was in the piece, but I've said it before, is that inflation is legalized counterfeiting. Counterfeiting is criminalized inflation. Mm-hmm. They're the same thing. The law just lets one group of people do it and not anyone else. So that group of people that are allowed to counterfeit are called central bankers. And the beneficiaries of central bank counterfeiting are central bank shareholders that have this legal monopolistic license to steal human time in perpetuity in the marketplace. And that is exactly what's happening around the world today. That's exactly what makes the rich get richer and the poor get poorer. It's a pyramid scheme. Fiat currency is literally a mechanism designed to take wealth from some and give to others. It has no other purpose. There's no other utility to the tool whatsoever. And again, because it's invisible, people don't understand it. People don't understand that the US dollar, the global reserve currency, the most powerful money in the world, is the largest pyramid scheme in human history.
Do you
Our
think
entire world is coordinated by a scam of quite literally epic proportions. There's nothing like it that's ever before existed.
do you think it's
A
hard for
whole model
people?
of central banking.
Yeah, sorry to interrupt, Robert. Do you think
Yeah,
that it's hard for people to see that because it's not the physical whipping of an actual
that's
human
right.
slave? It's almost something that's invisible. People just can't put their finger on it.
Yeah, that coupled with the now 100 plus years of propagandizing by central banks that, oh, we need inflation for a healthy economy, all this Keynesian dogma that's been propagated from the ivory towers. They very much have controlled um, the academic profession of economics the past 100 years. Whereas if you go and get a degree in economics, graduate or master's degree, and you go into the world to get a job, there's only one real source of jobs, and it's government and or central banks. You work at a think tank or you work at a central bank,
Mm-hmm.
basically. Um, and all these institutions that we hear about all the time that we think are the leaders of the world, they're sitting on top of this scheme. World Economic Forum, IMF, World Bank, Federal Reserve. Um, and it's painful. It's a bitter pill to swallow. People are like, what do you mean? It sounds very tinfoil hat or conspiracy theory. Like, just look at the mechanics of the system. You can remove all human intention from it completely. The tool is designed to do one thing. Just like a plane is designed to fly, fiat currency is designed to reallocate wealth from some to others. So it's a tool with just one utility, and it's theft. And then the piece, so that's it at a high level. The piece goes into all of the moral implications of that, the way the state has been organized as a result, the way, in the 20th century, we had 169 million people murdered by state action. That's both police and military. It's got a name. It's a modern day mega atrocity called democide.
Mm-hmm.
That's half the population of the United States murdered in 100 years by currency counterfeiters. And so the argument is, in general, if you eliminate this legal monopoly for money in the world, you'll break down the greatest system of slavery that's ever existed, and you'll also reduce the incentives to violence and the funding mechanism for global warfare.
Mm-hmm. So since we're in kind of like what everyone feels as a frothy, propped up, potentially artificial market, because I don't think we have a free market here. I think it's more of kind of like a kleptocracy, if you will. But with that being said, I read your book, Thank God for Bitcoin, and I myself, and I'm Orthodox Christian, and I don't shove it down people's throats, but it's something that is a big part of my life, my wife and I. And can you talk about kind of like that rent-seeking behavior, or kind of the moral aspects of, my grandma needing to be a speculator because in monetary policy is at 0% at the Fed's fund rate, and inflation is much higher than that? Can you go into that a little bit, please?
Yeah, I mean, even the terms I think are a bit soft, right? Rent seeking, the fact that grandma needs to speculate to overcome inflation.
Mm-hmm.
It's worse than that. It's your grandma's being robbed. She's been robbed her whole life. Rent seeking is theft. If it's not subject to competition, right? Market competition is the process by which we discover truthful prices, useful innovation, and, as I argue, individual virtue. In many ways, we uncover competitive and cooperative competence within ourselves operating in the free market. Inflation, if you just consider what a price is a data packet conveying the scarcity of a good or service in the marketplace. People tend to be more divisive the greater scarcity is. So if you just think about pure state of nature where we have no capital accumulated. We're all cave people trying to rub two sticks together and make a fire. Scarcity is really high, right? It's really hard to eat. It's hard to find water. It's hard to find shelter. We're starting from nothing, starting from the bottom. And as such, our behavior tends to be a bit more violent towards one another, right? We're living hand to mouth. We will fight to the death over the next meal, things like that. Whereas in the opposite end of that spectrum, you could say we have a civilization that's accumulated a lot of capital. This would just be stuff, knowledge, food, buildings, sewer systems, all the things that allow us to live more effortlessly, to satisfy more wants with less effort. And you could also think that in that pure state of nature, it's almost absolute risk. Everything's a risk, right? You're just trying, to go out and get your next meal, you have to go out into the jungle and hunt something. Everything's super risky. But in a very capital saturated environment, there's much less risk, right? You're not going to starve. You've got canned food in the cupboard, and you've got a refrigerator, and you've got a police force protecting all these things. So capital, we can consider as the mitigator of risk itself. And the moral side of it, the morality is emergent, right? So the morality that held in the age of hunters and gatherers was much less sophisticated and much more violent than the morality that holds us together today, because we have more capital. So inflation itself is artificially magnifying prices. Prices should be declining as we get smarter and better at producing things. As we can produce more units of output per unit of time input, prices should decline naturally. But central banks, because they are stealing wealth out of the money all the time, this is incentivizing people to take on more and more debt. And the largest debtor in the room is the government or the nation state. So this magnifies the perceived scarcity in the marketplace and drives divisiveness among civilizations, pushing us back towards that caveman original state of nature mindset. And it breaks down social morality. And I go into an example, which I won't do here because I've recited it before on other pieces, but you can tie this directly. It's like you can see how an individual merchant, basically the options he faces when a central bank expands the money supply, it induces him to weigh his moral integrity against his financial well-being. And he's actually incentivized to deceive his customers. And that this moral contagion basically infects the entire economic order. And that's why I would argue today, just look around in fiat world, which by the way, we are submerged in fiat world. No global society has ever been this deep into fiat, right? We have 350% global debt to GDP. Federal Reserve is effectively the central bank of the world, more or less. We've created this race to debase currencies everywhere. And that's why I think all these things are related. The tearing of the socioeconomic fabric, which in the US, we have cancel culture and attacks on freedom of speech and Antifa, all this weirdness. Everything's a scam, by the way. When the money's a scam, the thing that's supposed to be trust minimized, I should be able to hold money knowing that this is going to give me maximum optionality in the marketplace, that no one can steal it, no one can deauthorize it. This is, that's what people want. They want confidence in the US dollar. They want to have, this is the thing that if I hold it, I'm safe, right? And no matter what happens, this dollar can buy me anything that anyone can do. So it maximizes my resilience to risk effectively. That has theft integrated into the heart of it. It's stealing from you all the time. I don't care if you've got cash buried in your yard, under your mattress, you're being robbed by the central bank all the time. That causes this infection that, I don't know if your experience is the same, but operating in business world, I was a CFO for years. I have a master's degree in accounting. So I've interacted with a lot of businesses, seen underneath the hood, seen how they operate. 99 out of 100 have some element of scamminess to them. They're always trying to stick it to the customer and twist a little extra juice out of everyone. it induces that, rent-seeking behavior in all businesses. Everyone tries to become an intermediary. And yeah, I think fiat currency is just, it's a cancer. It really is a cancer. It riddles us socioeconomically. It shrinks our time horizons, makes us more short-term thinking. That's the reason I would say so many people are obsessed with these 10-minute or 10-second YouTube videos and nobody's reading.
That's right.
Everyone's eating shit food,
Fiat
like,
food.
Sugar, fiat food, the sugar, opiate epidemics through the roof, suicide, nuclear family falling apart. There's a website, WTFhappened1971.com, that goes through a whole gamut of socioeconomic data supporting this. It shows you right when we went off the gold standard, how far things have fallen. And it's scary. It's staggering. And that's why there's this battle cry in Bitcoin that we have to fix the money to fix the world.
Absolutely. Talk a little bit about the Cantelon effect, because some people don't understand, because this is a very quick snippet. And, I'd say some of my audience is very familiar with what you're talking about, but I'd say a majority probably isn't. I'd say their levels of understanding of money is anywhere from, I have no idea, to maybe sophomoric, at best. I'm not saying that to be, to sound intelligent or anything like that. I'm just saying people don't really study this stuff is what I'm trying to say.
Yeah.
So when you talk about how the Fed is actually creating greater wealth inequality, can you explain how that works? Maybe with the Cantelon effect or in your own words?
Yeah, sure. So, and that's why I named my show the What is Money Show, because I think that's the most important question anyone can ask themselves.
Mm-hmm. I agree.
You don't listen to me. Don't listen to anyone. Just go ask yourself, or maybe just listen to this one suggestion. Please go ask yourself, what is money? And just keep relentlessly asking yourself that question and see what you find out for yourself. You're doing your own research. And I promise you'll come to see what we're talking about today. The Cantelon Effect, which is a term named after an old economist, basically means it is that mechanism, that inverse Robin Hood, if you will, where Robin Hood would steal from the rich and give to the poor. The Cantelon Effect basically means you're stealing from the poor, giving to the rich. Now, you can argue about this because some people will say that you could, and this is true, you can politically point the recipients of the freshly printed money, who are basically siphoning value off the productive economy. You can point that towards anyone. So you could, in theory, say, oh, we're going to print all this new money and give it to the poor. But in practice, that almost never happens, because the people deciding to print the new money are also deciding who gets the new money.
Of
and
course.
By some miracle, they always choose themselves and their friends. It's just crazy how that works. But the general effect, to try and state it simply, is you first have to understand that one definition of money is that it is a claim on the savings of society, or a claim on the productive capital of society. So the paper itself has no actual value other than its expected future exchange. And we don't have to get into why that is necessarily, but if you just understand that money is not wealth, money is a claim on wealth, right?
Mm-hmm.
If one group or one person can go out and produce additional claims on that wealth, that at any one point, the supply of wealth is fixed. It grows over time, but on any given day, there's a fixed number of buildings, goods, services, knowledge available in the marketplace. If I can, at a keystroke, increase the number of claims on that pool of capital from 1 trillion to 2 trillion, and give those claims out to myself or those that my friends or whoever, I can basically confiscate wealth from everyone else that's holding money. So it is another way, if you're going to look at it through an equities lens, it's a stock split, but you get to decide who receives the stock. So you get to decide who gets diluted and who gets anti-diluted. So it's anti-dilutive in favor of those that are insulated by the legal monopoly we call central banking, and dilutive to all of those that are forced to use the money as a claim on savings. So it's the very simple way to say it is, whoever gets the freshly printed money first steals from everyone else. And then whoever gets it second steals a little bit less, but they're still stealing. And then whoever gets it last, which are typically the poor, retirees, people living on fixed income, they get stolen from. They're robbed by this mechanism.
Yeah, it's the people with no assets and the people that are typically living paycheck to paycheck.
Right. Which again points to the total moral failure of the system. What are we doing? Like all this political platitude about saving the environment or saving the poor is complete and utter bullshit when the money is robbing those people blind. Inflation's robbing those that have no voice, right? The unborn children, by the way, because we're dumping all this on future generations. The people that are politically or economically disadvantaged, they just don't have any way to really express their preferences other than by voting. Voting doesn't work really well either. That's a whole other rabbit hole. And the environment, by the way. Again, when we're artificially magnifying scarcity, we're creating more divisiveness among people, and we're creating incentives for people to externalize cost into the world. One of the number one ways to externalize cost and increase profit margin is pollution. So it's a lot cheaper to go dump all your plastic shit in the middle of the ocean than go through some expensive recycling process. But when you're facing artificially magnified scarcity, that's exactly what you're going to do, because you don't care about the long run. You care about the short run.
Absolutely.
So inflation, it's pure evil. People don't understand it, but they're about to get a really strong lesson on it, because over the next 10 years, inflation is going to be brutal all over the world.
Yeah, I agree as well, because just the classic definition of inflation is just, as you mentioned, is introducing more units of currency or money or whatever you want to call it into the system. And if you look at a chart of the M2 money supply, it's literally like a hockey stick. It's hilarious. So I know that this first 25 minutes, for people that aren't familiar with this subject matter, you and I sound like two conspiracy theorists, tinfoil hats. We're very negative, right? But actually, I'm a very optimistic person. I love treating others well. I love treating myself well. I love enjoying life. I'm a lover of life, and I follow you on Twitter, and I know that you are as well. You have a family, I think a beautiful wife. I don't know, I see these like laser eyes and kids, and it looks like, you with your family. So I'm like, okay, family guy that, it's positive. Tell us, let's flip the switch now and explain why you're a Bitcoiner and why you actually are a positive person, as opposed to what people may think, not knowing who you are based on this first 25 minutes. And I'm not saying you're negative. I'm just saying people don't understand if they don't fully grasp this. It comes off as negative.
I'm swinging pretty hard right here, but I am passionate about this.
No, I respect it. I respect it. I respect it.
How could you not be if you just gave me the benefit of the doubt for 2 seconds and assume what I'm saying is true? If that were true to you, wouldn't you be kind of shouting it from the rooftops a little bit? It's just
100%.
One of the examples I give is, imagine standing. This is an American reference, but if you imagine standing in the antebellum South, and you see all this forced labor taking place, and you do see the whips and the abuse and all, like, wouldn't you feel morally impelled to do something about that?
Of course.
So that's that's the feeling, and that's probably the passion that comes across. But it is, it's tinfoil hat-ish. I think the tinfoil hat has become a little less written off recently. Governments have really started to show their true colors over the past 12 months, and more and more people, I guess you could say, are putting on their tinfoil hats. But it's not. The beautiful thing about it is that we're in the digital age now, and the possibilities are seemingly endless. We don't know which way the world's going to go. We could go kind of this dystopian Orwellian direction, or we could, just to answer the question, why am I a Bitcoiner, is because Bitcoin represents the opposite of that. Bitcoin represents a money that cannot be monopolized or weaponized to steal wealth from others. And Bitcoin has changed me a lot, and it's changed a lot of Bitcoiners a lot, and that many of us were swept up in that fiat currency complex, competing to, make the next dollar and get the next piece of rent-seeking or whatever. But by studying and interfacing with this honest money, the most honest money we've ever had, Bitcoin is just a system. You just think of it as incorruptible money. We have money that is completely, utterly corrupt to its core today. Bitcoin is the exact opposite. It's money governed by rules that everyone can see and nobody can change. So it's a fair playing field. And I think there's a reflexivity between man and tool, right? Between the systems we create. We could say that, human behavior and our characters themselves are emergent properties of the incentive structures we're operating within. Or as Charlie Munger would say, show me the incentives, I'll show you the
I
results.
love that quote.
And by changing, by Bitcoin being this radically new and honest incentive schema, it does impact you, and it impacts you quickly. This is not something that happens over the course of generations. For me, it's been just a few years.
Mm-hmm.
And I have a beautiful girlfriend. I have a beautiful young daughter. I have a tremendous amount of hope for the future of humanity. The more deeply I've studied Bitcoin, the more unstoppable it appears to be. And now that it's at a $1 trillion market cap, no one's figured that out. Bitcoin is a technology optimized for survivability. When I say no one's figured that out, I mean no one's figured out how to stop it. It is money insulated by military grade encryption technology that is designed to produce a block every 10 minutes, which just means record transactions, essentially, and hold a supply maximum of 21 million. So totally uninflatable money in a world where everyone's being robbed in broad daylight by inflation faster than ever.
Mm-hmm.
Governments and central banks are essentially self-annihilating these systems and forcing people into Bitcoin. The more they steal from them, either through outright non-consensual taxation or through less obvious inflation,
yeah.
which is increasingly obvious, by the way, because it's happening faster and faster. The more they are creating this incentive pressure to push people into money that doesn't have theft integrated into it. And so what I think is going to happen is these moral changes we've witnessed in the lives of Bitcoiners, where people have just become broader time. First of all, you start thinking about savings again, really. It's just that. As today you try to save money in a bank, it yields zero, and the supply is being inflated at 30% a year. So you're going to get negative, depending on what your aims are, you're going to get somewhere from a negative 10 to 30% real yield on your cash, roughly.
Yeah,
or
sitting in the
you
bank.
Can put it in Bitcoin, which has averaged a 200% annualized return for the past 10 years.
Mm-hmm.
Right. So it becomes that simple almost. It's deciding where to save your money. And then once you have a money that you can save in and it actually has positive yield, all of a sudden you don't want to consume as much. You don't want to spend the money that's going up at 200% year over year. Even if it's going up at 2% year over year, it still reduces your incentives to spend it. Right. Mm-hmm. So it doesn't matter if it's 200 or 2. The fact that it's positive, you're saving money that appreciates, reduces your consumptive habits, which increases your time horizon. And the way I think about it is we all have these spheres of concern where if you're just a caveman, again, your sphere of concern is about as big as your body and your mouth and what your eyes can see. You just want to club this, eat that, try to live for tomorrow. Mm-hmm. But the more civilized we become, the more risk we've mitigated through capital accumulation, the broader that sphere of concern becomes to encompass more others, right? Others in the world, others in the future, others, the environment. It can grow to encapsulate the whole planet. And when you grow that sphere of concern, that is correlated to your moral compass or your moral behavior, or your moral attitude, and that you start to actually become more selfless. And that's why I just think Bitcoin is so important, right? We're so far off track. We have created a tool that's just destroyed us. You could almost talk about like smoking cigarettes was something that was really pervasive and it destroyed us physically. Everyone was doing it, and it actually creates cancer and destroys your physiologically. Mm-hmm. Fiat currency is something equivalent to you economically and morally. It riddles you, it destroys you, it kills you slowly from the inside. I think Ross Stevens had this great quote where he said, for the same reason we have warning labels on cigarettes, it says smoking destroys health. we need a warning label on fiat currency that says fiat currency destroys wealth.
Destroys wealth. Yeah, absolutely.
Yeah.
Yeah, it's funny. I talk about this probably too much on this podcast, but my parents, they came from another country. I was born here, and you're taught to be a saver, right? You don't spend more than you can afford. You don't use credit cards, things like that. And I actually have a couple videos on my main channel talking about how savers are literally losers. And it's not that savers are losers like, oh, you're a loser, you're a nerd. I'm talking about they are literally losing money, losing their wealth over time by trying to save their money in the traditional sense. So talk about very quickly just, time preference, what that means, and maybe how corporations are starting to think in time preference, if you will, kind of like the Michael Saylors of the world with the melting ice cube.
Yeah. The savers are essentially the victims of the fiat currency pyramid scheme.
Of inflation.
If you're trying to hold your savings in a money that another group can artificially produce ad infinitum, that's a hole in your piggy bank, right? They can expand the diameter of that hole at will. They can drain you more or less quickly over time. Mm-hmm. The problem really is the recency bias. Especially in America, we have this sense of America exceptionalism, which we also attach to the US dollar. And we just think that, dollar's been stable for 100 years. It's going to be stable forever. We're the global reserve currency. Things are just going to continue as is. And that is a deadly cognitive fallacy, because inflation happens gradually, then suddenly. And we are just, once again, look at that money supply chart. We are entering the suddenly phase, unquestionably. And money, as you alluded to, it relates directly to time preference, because if your money is leaking value and losing value over time, then you're trying to really spend it as quickly as possible, or even take on debt. That's the other really perverse incentive here, is that your real incentive is to go out and borrow money at very low rates, which is also connected to the fiat currency scheme, that the price of money declines because money doesn't matter. Anyone can just print it. So governments decrease rates over time, while inflation rate expands. So you get these larger and larger negative real yields. So you're incentivized to go on and take on a ton of debt and buy anything that can outperform inflation, essentially. And time preference is impacted by monetary dilution because it forces you to think more short term. So in Austrian economics terms, this is a little bit confusing. It raises your time preference, which means that it shrinks your time horizon. Whereas hard money, something like Bitcoin or gold, you're saving in a money that cannot be diluted. It does not have theft integrated into it. You cannot be robbed. If you're holding physical gold, no one can go out and expand the supply of gold 30% overnight, right? There's a proof of work necessary there that no one can compromise. Same is true for Bitcoin, even more true for Bitcoin.
In the form of mining. And I didn't mean to interrupt, just so people understand,
Yes.
The proof of work is either physically mining for gold or verifying the transactions on the blockchain through Bitcoin. Sorry, go ahead.
That's right. No, that's exactly right. And that's the proper way to think about it, is that work is necessary to provide assurance of supply scarcity, or supply fixity, we could say. Scarcity is a demand supply term, but to keep the supply at a near guaranteed amount, which gold's not a guaranteed amount. It's just historically it's grown about 2% per year. Mm-hmm. Bitcoin is a fully guaranteed amount. We know algorithmically its supply cannot change. It requires work. There has to be an expenditure, a sacrifice by market actors to obtain that money. That's what infuses the money with a fixed supply, basically. And it's unavoidable. This is thermodynamic reality. Otherwise, if there's no work necessary, people will just produce it, right? There's no cost. They'll produce it to dilute everyone else. So it's this game of everyone trying to dilute everyone else is what causes the market to zero in on the most dilution resistant money, which was gold and now is Bitcoin. And that's the big deal. That's why Bitcoin is disruptive to gold. And so time preference, when you have money that holds its value over time, you're going to think longer term, basically. And this is coming to the corporate sphere, I think, as well. I think it works at every level of analysis. It works at the individual level, it works at the corporate level, it works even at the nation state level. Many of the Austrian economists would actually argue that time preference is a direct reflection of civilization. The lower a group's time preference, the more civilized they are. Um, and I think, just as I described earlier, with how Bitcoin changes you individually by interacting with this tool that is a superior savings technology, causes you to expand your own sphere of concern. I think it's also true for corporations. So Saylor's a great example. He's a real trailblazer and probably the best ambassador in Bitcoin today. Just an absolute intellectual dynamo, brilliant speaker, brilliant communicator, and someone that he's predisposed. He's all of his material needs have been more than met. The guy's a billionaire, right? He doesn't care about the money anymore. And he's really someone whose values are centered on leaving a positive legacy. He's created things like the Saylor Academy, which basically gives free education away to everyone. And Bitcoin is just that tool that enables someone with deeply held long-term values to express them in perpetuity. Because now he can, and we talked about this a bit in the Saylor series, there's ways now he can fund those values beyond his own death. So it's really incredible. It becomes almost like a digital monument to the values that you hold. And you would expect that other corporations that are initially adopting Bitcoin as an inflation hedge or a speculative investment or whatever, that over time, as Bitcoin keeps eating all the money, it's just going to shift the way people look at the world and broaden the sphere of concern of everyone, which will contribute to the lowering of aggregate time preference and the proliferation of civilization.
Absolutely.
So it's just, people get so laser focused on this guy or that girl or what are they going to do? But you got to zoom out a little more and realize that people are really fluid. The way we change, the way we think, again, the incentives we operate within mold our characters very quickly. And I'm not talking about, again, intergenerationally. This can happen within the scope of even a lifetime, a few years in the case of many Bitcoiners I've seen, including myself. So I think this reflexivity between creator and created is going to radically reshape human civilization, and Bitcoin's at the core of that.
Yeah, once you really go down the rabbit hole, what you're saying is not sensationalist at all. Once you really understand it, when you fix the money, you fix everything else. In terms of what is the end game, I guess. So I guess this is kind of like a two-part question, and I have a bad habit of doing this. I ask too many questions within one question, but I guess the original question is, what is the end game? Are nation states going to adopt this? Are corporations going to adopt this? Or is this just some fad that's going to go away in 10 years? And I'm asking this as devil's advocate. I already know the answer, but what are your thoughts about this? What is the end game? And if there is any FUD, or if there is any truth to any of this FUD, what would it be in your opinion?
I certainly believe that Bitcoin has had a 12-year operating history that's virtually perfect. It's had more than 99.99% uptime. It's cleared over $2 trillion of transactions. It's the fastest growing asset in human history. It's the most secure computing network in human history. It has no unsolved computer science problems. It just needs to keep doing what it's been doing perfectly for 12 years, which is churning out a block at an average of every 10 minutes and holding a supply cap of 21 million. That's all it does. It's very simple code, actually. And that simplicity is actually the source of its resiliency. And that there's nothing to attack. There's a small, simplistic piece of code that everyone can see. There's no attack surface, so no one can hack it. There's this big concern with hacking in Bitcoin because people don't understand the difference between a Bitcoin exchange and the Bitcoin network. Bitcoin network has never been hacked at all. It's had lots of bugs come up because that's what software does, but because it's open source, it fixes itself. This is just like any other open source protocol we depend on, like on the internet, HTTP, TCP/IP, these things. The open source nature of them gives them essentially immortality, because they can a bug can come up, but then people can go in and fix the bug, and it just keeps rolling forward. So I don't think Bitcoin's going anywhere. And so long as it keeps doing what it's been doing flawlessly for 12 years, The outcome is binary. Really, it's Bitcoin keeps doing that. It eats all the money in the world. It's perfected all the properties of money as a technology. There's nothing else you can introduce to Bitcoin that would make it better. And now, even if you could, by the way, Bitcoin is open source tech. It can absorb features from other that other competitors market prove, essentially. Um, and there's a rabbit hole there too. People are like, oh, it doesn't do enough transactions per second. It'll never scale. It's not private. But when you understand complex systems in the biological domain as well as in the informational domain, like the internet, they evolve in layers, right? So the base layer, Bitcoin is the base layer for this internet 2.0 or internet of value, or this global digital non-state economy we're talking about. It's something radically new, and Bitcoin's layer one. All of these other
just kind of like how gold is now. I read I read Nick Badia's book Layered Money. Shout out to Nick if anyone's watching this. I highly recommend getting Layered Money by Nick Badia. Again, sorry to interrupt, but yeah, right now gold is kind of like that base layer that everything is built upon. In the future, what I'm hearing you say is that Bitcoin will kind of be that base layer that gold is today.
That's exactly right, and it's a great example because no one understands that either. Gold still is layer one in the world. If one country invades another, they don't want anything from that country other than their gold. Right? You're going to pay me tribute. If I invade you and defeat you, and we go and we sign a treaty, you're going to pay me tribute in gold. Gold is geopolitical money. It is layer one to human civilization. It is the base layer of central banking and therefore the nation state. So, and Badia is awesome. He's a friend of mine from LA. I'm going to have him on the show soon too to talk. I haven't got to read it yet, but I'm really looking forward to it. He's a great writer. So you have this emergent layer one competing with the ancient layer one of gold, but it's due to its digital nature, it's incorruptible, right? We can't create even institutions on top of it necessarily that would be sustainable that are corrupt, because people have so much optionality with their capital. If I don't like the way one custodian or one bank or one service provider, any kind's treating me in Bitcoin, I pull my Bitcoin. I can settle it with finality anywhere in the world within an hour. You can't do that with gold. Gold doesn't move, right? It's just, you have to trust and trust and trust. And that trust gets violated repeatedly. So I think Bitcoin either survives and outcompetes layer one because it's superior across all dimensions, or there's some unknowable unknown, which is by definition a black swan event that takes it out completely. And that's where we're at with Bitcoin. It's like, okay, everyone's trying to figure out how to stop this thing. There's never been a larger honeypot in the history of humanity. There's never been a greater enemy of the state in the history of humanity. This is a tool that is going to take away the most important power nation states and central banks hold. It's the most important game in the world. It's the whole game. To control the money is to control the world. And now we have this emergent money that cannot be controlled. So if you're holding the reins on any central bank or any nation state, you are really arrayed against Bitcoin. Like, turn that shit off. You're taking away all my power. This is my whole business model is premised on plundering my citizens, and you're going to give them an option that I can't plunder, basically.
That's right.
Everyone wants to turn it off. There's never been a greater prize to turn something off ever, right? You see Home Depot get hacked for, I don't know, 500,000 customer credit card accounts. Like, there's a tiny prize associated with that, a couple $1,000,000 maybe. Bitcoin's $1 trillion asset. It's competing to be a multi-$100 trillion asset. Yet no one has stopped it, slowed it down. It's just operated perfectly, right? So either it keeps doing that and it eats all the money in the world, or some unknowable unknown takes it out completely. I don't know what that could be. A protocol, some unforeseen computer science issue, or maybe some cosmological event, some supernova. I don't know. But the fact that you get that far out in your imagination trying to figure out how to take it out really just gives me more and more confidence about it.
Yeah, I would agree.
And at that point, as this realization dawns on nation states and central banks, we can't stop it. We can't, there's no unilateral attack vector that I can take to shut this thing down. Your only rational, pragmatic strategy at that point is to acquire some. You have to acquire some as an insurance policy against its success. If I'm a central bank with whatever, $1 trillion balance sheet, a $10 trillion balance sheet, and I determine that there's even a 1% chance Bitcoin could succeed, my prudent decision is to put 1% of my assets into Bitcoin as a hedge against its success.
Mm-hmm.
And that increases Bitcoin's market capitalization. That increases the probability of its success as others run the same calculus on Bitcoin. So now maybe they're looking at it and saying, hey, it's got a 1.5% or 2% chance of success. So they're putting even more of their assets into the Bitcoin network to hedge against its success, which further increases its likelihood of success as others run the same calculus, and so on and so forth.
Mm-hmm.
And this is something that Satoshi presciently pointed to in the beginning. He said, this thing has the potential to become a self-fulfilling prophecy. And that's what it is. It's money characterized by perfect information that nobody can stop. And clearly, everyone in the world prefers a money that does not steal from them. And that's why Bitcoin wins, in my opinion.
Yeah, I think excess capital goes where it's treated best. And
That's right.
For someone like me, I mean, I decided to put, as a, I'm not going to say I'm some like Bitcoin maximalist, or I'm not, a Pomp, I guess he put, 99% of his net worth in Bitcoin, or maybe 100. But, I have about 18% of my net worth in Bitcoin. It's only been growing year after year, not just because of the price increase, but my conviction has been higher, just because I've been studying this stuff since 2008. So I'm 33 years old. I'm a product of the great financial crisis. And I'm starting to peel back layers of the onion for about 13 years now and understand, okay, how did, half the world's global economy collapse after 2008? What caused this? And then you start to see how really interconnected it is to what you alluded to with all the central banks pretty much going down the same path of debasing their currency, right?
That's right.
So I guess the future, in my opinion, because, you start thinking about family, the nuclear family values, lowering your time preference to not just, hey, how am I going to fill up my stomach today, but how is my family going to enjoy the wealth and the sweat off my back that I created, 20, 30, 50, 100 years ago? And what are you doing personally? Are you like 100% Bitcoin? And you don't have to give specific numbers, but philosophically, are you still someone that came from like a corporate background and understand equities and understand it's still a great way to build wealth? Kind of like understanding the game is fixed, but playing it as well? Or are you gung-ho 100% Bitcoin?
Oh, I understand equities very well. I've traded equities my whole life. I've invested my whole life. I've been investing since I was a kid, actually.
Yeah.
I have 0% of my net worth in the current traditional equities market.
Wow.
0%.
That speaks volumes to me.
It's the most manipulated the market's ever been in history, right? Historically, a PE ratio of 30, pretty good.
Yeah.
What's the PE ratio of Zoom right now? Is it 2,000, 1,800, 2,000? Who the fuck would buy that?
But it's forward looking. It's forward looking, Robert.
I don't give a shit if it's forward looking, unless they, expand to Mars and the rest of the solar system. It will never be worth that much, ever. And that, to me, and people don't understand this, but growth tech stocks have become the preferred store of value because the store of value function of fiat currency has been obliterated.
Mm-hmm.
Okay, as has real estate, as has gold to some extent, physical gold, and Bitcoin clearly, as the best performing asset in history, has done very well. So I have never been more fearful of the traditional equities market. I also think bonds, government bonds, specifically U.S. treasuries, completely screwed, right? They're at the zero bound. The bill is effectively coming due for decades of government misallocation of capital. They can no longer, there's no more buyers for the debt. Basically, we see a lot of international buyers going away from it. There's no yield. People, the zero bound is a game changer. You can't just keep lowering rates below that because all of a sudden you've inverted the calculus of economics. The interest rate is the price of time or the price of money. And when that goes below zero, you're fighting nature at a very fundamental way. you're trying to reverse the flow of time or say money is worth less. I'm sorry, that the price of money is negative, which doesn't make any sense because money is it's an insurance policy, right? It's intended to give you this uncertainty insurance in the marketplace. And so all of these, so the bottom of all of this is that the money has been corrupted and compromised. It's no longer satisfying its base level functions. So people are being forced further out along the risk curve into equities or worse, trying to preserve value, preserve wealth. And at the very end of that risk curve today is Bitcoin. Bitcoin's a 70 or 80 vol asset, which is really high. But the more that it grows, the more that volatility contracts, and the more it slides down that risk curve towards the bottom, which is gold. Gold is the historic, trust minimized safe haven for value, especially in times of crisis. And for some of the reasons we talked about today and reasons I've talked about much more deeply in my other work, Bitcoin is disruptive to gold. Everything that gold has ever provided for humanity, other than industrial use, so besides putting it in your teeth or putting it in electronics, Bitcoin does better than gold. All of it. It's not even remotely close. There's no contest. Bitcoin's 10,000x better money than gold across all properties of money. So today I'm like, I would say I'll just say over 80% of my net worth is in Bitcoin. And this is difficult too for people because they'll misinterpret your passion for demonopolizing money in the world. They'll misinterpret that as like zealousness for Bitcoin.
Yeah, fervor.
And it's not even about that. I'm looking at Bitcoin very pragmatically, that it's the best risk-adjusted bet I've ever seen in my life. Every investment I've ever looked at, not even close. But it also represents this moral change, right? You cannot disentangle morality, the moral standard, from the monetary standard. They're very inexorably tied. And this comes from a study of history. I didn't make this up. There's people have written about this for thousands of years. And it's also the reason that when you debased currency always presages the implosion of civilization. That's why ancient Rome collapsed, right? They broke down their monetary protocols, led to the breakdown of their political protocols, led to the breakdown of civilization. That's where we're at. So I feel, I guess you could say it's left brain, right brain a little bit. The left side of your brain, which is the more analytical, logical side, is saying, hey, the Sharpe ratio on this thing is incredible. It's the best performing asset in human history. It has nothing else to do other than what it's already been doing. Like you're talking about betting on future growth of Zoom, that it's going to do A, B, C, D, E, F, G. It's like there's nothing on that list. It's like, what does Bitcoin need to do to succeed? Literally nothing new, not one new thing. Just what it's already been doing perfectly.
Yeah, it needs to be Bitcoin.
Competing, so $1 trillion asset today, competing for global store of value, which could be a $250 trillion asset or market, addressable market. How is that not the best risk-adjusted bet in the world? Show me an equity competing for a market that asymmetric with nothing to solve for and no conceivable competition. Once you really understand money from first principles, you understand it's valued because of its liquidity and its network effects. That's why money's a winner-take-all market. That's why we have one analog gold. That's why we're going to have one digital gold. So pragmatically, I look at Bitcoin like that. Best investment opportunity I've ever seen. But then right brain, which is more concerned about big picture patterns, connections, you also see this whole narrative of money being broken and it causing this institutional rot, social rot, scamminess we have everywhere in the world. So it just gives you this integrated viewpoint on what I think is one of the most important innovations in human history.
I completely agree. When I look at, my eyes were opened because I've been following gold for many, many years, and all the gold bugs, they've almost been salivating for this kind of a macroeconomic scenario, right? And
Yeah.
and then you just have Bitcoin swoop in and eat its lunch, right?
Yeah.
So the monetary premium of gold, I think, is getting eaten by Bitcoin, and that's just the first thing. So if you look at like Pac-Man, Bitcoin is the
Yeah.
Pac-Man, gold is the first pebble, and then you have what? You have real estate or
Bonds.
bonds,
Yeah.
real estate. Then you have nation states, things like that. And I think that that's going to just make the price point that it's at right now at, let's just call it 50,000 for the sake of this podcast. I think it's a little bit higher right now, but I feel like that price point of Bitcoin can only go 10, 50, 100x from here. And for someone hearing this who hasn't really gone down the rabbit hole, explain to them why $500,000 Bitcoin or $5 million Bitcoin isn't that crazy of an idea.
Sure. I always think about it in market cap terms. I just think that's the right way to think about it, because otherwise, especially in crypto, people get focused on like, oh man, Bitcoin's 50,000. I can't afford it, but
Yeah.
shitcoin A is 2 cents. I can afford that, which that doesn't make sense, because you can, the supply is arbitrary, right? The market cap, which there's more nuance there too. Actually, the market cap isn't exactly perfect for most crypto assets that aren't liquid. You really should look at realized cap, but that's a whole nother thing. Let's just say at $50,000 of Bitcoin, it's about $1 trillion market. Gold is a $10 trillion asset. 10 to 20% of gold's market cap is industrial use. So that's non-monetary use of gold, electronics, dental, et cetera. $8 to $9 trillion, $8 to $9 trillion of gold's market cap is monetary use, so use as a store of value. However, and you can check out gata.org on this. This is the Gold Antitrust Action Committee, I believe. Central banks and nation states have been waging a cold war on gold for the past 50 years, since we went off the gold standard, talking out of two sides of their mouth. And one side telling people, oh, gold is an old barbarous relic. We don't need it anymore. We need a more flexible monetary policy so we can manage the economy, and all this Keynesian bullshit propaganda, while at the same time buying gold every time they print money, because they know it is still geopolitical money, and they're hedging against one another's currency risk effectively by buying gold. So $50,000 Bitcoin is $1 trillion market cap. I would say gold's unsuppressed market cap is more likely in the range of 25 trillion, could be a lot more. Very hard to understand that number, because it's been so systemically suppressed for so many decades in the derivatives and paper markets that it's really hard to tell. But so there's if Bitcoin is just meets its first milestone, which is that it's better than gold, you're looking at 20 to 25x upside on current prices. That alone would take Bitcoin to $1 million plus per Bitcoin, which would be, again, 20 to 25 trillion dollar market cap. When you get into $5 million Bitcoin, you're talking about more like $100 trillion market cap. That today is global M2. So that's a really big number. That's most of the narrow money in the world. Again, talking in 2021 dollars, because the other thing that's happening is that we're going to dilute the shit out of the currency. I just I did a episode with Robert Kiyosaki. I think the global M2 today is 100 trillion. I think by the end of 2030, it's going to be 1,250 trillion. So 1.25 quadrillion. I think we're going to 12x global M2 in the next 10 years.
Wow.
So massive dilution, massive. And this is rooted in a study of many hyperinflations of the past, but essentially there's a law of accelerating issuance and depreciation. So the more currency you issue, you're actually creating more discontinuities in the marketplace, that people that are receiving this money, whether it's helicopter money, PPP loans, however it's coming out, it creates more demand to try and address the very dislocations that the inflation is creating. So the rate of US M2 production ends up doubling in this projection, which is based on historic models, roughly every 4 years.
Mm-hmm.
So we're expanding the money supply at 30% per year today. I think it'll double to 60% in the next 4 to 5 years. And I think 45 years after that, by the year 2030, we're probably looking at like 140% annual monetary expansion. You're really getting into hyperinflation at that point. It starts to really just break down. All the while, you have Bitcoin as this irrepressible barometer, right? They've been suppressing gold to try and keep fiat currency looking relevant, so they keep inflating over time. But Bitcoin, they can't do that. They don't own enough of the network to do.
Mm-hmm.
So, $5 million in today's purchasing power per Bitcoin, I think, is when it eats all global M2. That's a $100 trillion market. And then you start looking at other stores of value, bonds, real estate. You look at all of global wealth. I think the number is around 500 trillion today. I think Bitcoin at its peak eats about a third of that. So call it 150, 160 trillion. But here's the kicker. We're at 500 trillion global wealth under a central banking paradigm. The barriers to free trade and wealth creation are inversely proportionate. So the more you lower barriers to trade, regulation, fiat currency, inflation, all this uncertainty, the more you lower these barriers and create more certainty in the world by people operating on a sound monetary system, wealth creation explodes. That's what capitalism is. It's lower the barriers to trade, preserve life, liberty, and property, let people trade. That's how we create wealth. When we restore capitalism in its purified form to the world, which is something that was never before possible without Bitcoin, because the money always gets monopolized and communized. Bitcoin is pure capitalistic money that no one can change or turn off. I think global wealth creation is going to absolutely explode. I think we're going to 10x global GDP in the next 100 years. Bitcoin will represent a 1/3 claim on that wealth forever. So if we go from $500 trillion in global wealth to $5,000 trillion in global wealth, Bitcoin will represent, its market cap will represent 1/3 of that. So that's a massive number, right? That is $5 quadrillion. So Bitcoin's market cap in 100 years would be $1.67 quadrillion.
Yeah, a third of that. Well, it's funny. The only reason I use dollars to use this as like a nominal description, I guess, is just because that's what most people think in, right? They think in dollars.
That's right. We've been corrupted by the central bank.
That's the only reason.
Right? We really were thinking in gold, by the way. You were thinking in gold when you thought in dollars, but then they removed gold. They removed free market money from your thinking. So central banking is a computer virus on your mind. Think about that.
Well, it's funny because I watched the original Matrix that came out in 99. I watched that literally every year, once a year. I don't know why. It's one of my favorite movies. And after Bitcoin came out, after I read the Bitcoin Standard, I think I read that in like late 18, early 19, right after it came out. You start rewatching The Matrix and you're like, holy shit, they're just describing Bitcoin. It's so funny, And when you start thinking in that terms, it's like, okay, I've either lost it or I've seen what, cannot be unseen, So it's so funny, man. The thing is, though, my conviction is not matched, as I mentioned, net worth, because part of me still goes back to that. I understand everything you're saying. I already know what you're going to say before you say it. That's how crazy Bitcoin kind of gets you down this rabbit hole. But my point, and I agree with everything you're saying, by the way, my point is that I already know the fiat game. I would come from a traditional finance degree. I worked in finance. I worked in capital markets. And trust me, I am not those dudes. A lot of those dudes that I work with were sociopath, Wolf of Wall Street bankers, which is fine, but that's not the lifestyle that I want for me or my family. So anyway, my point is that I kind of know that, the shell game on the street, on the beach is a scam, but I know it's also going to increase my wealth by partaking in it. So for me, it's like a moral conundrum. Do you understand what I'm trying to say?
Yeah.
So what are your thoughts on that?
Well, you could think that it would continue to do what it's been doing, but my general argument would be that the pyramid scheme is falling apart. I don't think an industry that is critically dependent on being shrouded in deception and deceiving its customers, which is as we both know, traditional finance is mired in that. The whole thing is full of agency problem and et cetera, et cetera. I don't think that model holds up in the digital age where transparency, authenticity, simplicity are more highly valued.
Transparency.
And I also think we're so divorced from supply and demand fundamentals now, where price changes in the marketplace are just an expression of Fed policy. Zoom is not at an 1800 price to earnings multiple because of Zoom. I promise you, with every fiber of my being, there's no intellectual justification of that exists, period, whatsoever. It's because of the Fed policy to produce dollars ad infinitum. So investors are like, I don't know where else to put this fucking money. I'm just going to buy the best performing stock. Again, because of recency bias. Again, because of a shrinking time horizon. They don't know what else to do. It's been going up for 10 years. Might as well buy it. We're back in the Nifty 50, 60, 70 years ago, where people thought stocks had reached that permanently high plateau. I mean, that was a quote from before the Depression, but the Nifty 50. Actually, when was the Nifty 50? Was that before the Depression?
I'm not familiar. I'm not sure.
So this is from Dalio's book. There was a point, I forget, now I feel silly, but it was either before the Depression or it may have been right before the 80s, the savings and loan crisis. These Nifty 50 stocks, every commentator in the world literally said these stocks are going up forever.
Mm-hmm.
They're store of value, buy them. This is all you have to do. You want to save money? Just put your money in these 50 stocks, diversify and hold it. They're store of value. Hold it forever.
Yeah.
I'm pretty sure it was before the savings and loan crisis. And then there was the huge collapse. Nifty 50 got destroyed. We now think that about Facebook, Apple, Amazon, Netflix, Google, Zoom. I mean, I guess Zoom's sort of there almost. It's ignorance. It's ignorance being foisted upon us by the central bank computer virus that's been implanted in our mind to think in dollars and not question the true nature of money. That's why we think these stocks are just going to go up forever. And what's been happening the past 10 years will happen the next 10 years. That's the worst investment strategy in the world, in my opinion, to try and assume things are going to continue as is in an age of exponentially accelerating change is the worst decision you can make.
Yeah, agree. That's kind of like that Jeff Booth school of, technology, deflation, all that stuff. I've also had him on the show as well. It's funny, to your point, if you just look at a chart of the Fed funds rate, meaning the interest rate at which commercial banks essentially get their money loaned to them from the central bank, if you just look at it, the last time they went up was in, I think, the summer of 18. And what did the stock market do in December of 18? It crashed. Then you look at when it crashed, what did they do reactionarily, if that's even a word?
The dovish pivot.
Yeah, they just went boop and went straight back down to ZERP, straight back down to zero interest rate policy. And it's interesting because I remember 06, and I remember my portfolio getting its teeth kicked in by 30, 40%. And I talk to a lot of these young kids now who are like, let's just call it 28 years old and younger. All they know is a bull market. Past 12 years, 13 years, all they know is a bull market. I'm like, you realize the people you're watching on YouTube, they look smart because a blindfolded monkey could pick stocks and make it look like it's easy, right? So I'm always coming from a position of, hey, I'm just a guy on YouTube. I've done this, and personally and professionally, but you have to look at the macro picture first. And I never claim to know, an insider tricks, if you will, as to why stocks.
Yeah, that's why I think first principle comprehension is more important than ever because the world is changing faster than ever. You cannot grab trends and expect them to hold. Things disrupt very quickly. And that's why you need to understand at a deep level what's going on. And there's nothing deeper than the money. But to your point, I think it was Buffett. He said, when the tide goes out, you find out who's swimming naked. Yeah, most people are swimming naked right now. And the cataclysms comes. It's by design. Fiat currency. Mises wrote about this in 1949. When you expand the money supply, money and credit, you end up with one of two outcomes. There's only one of two. You either stop expanding it at some point and the market resets to economic reality. You have a deflationary shock. Prices that were expanded by increased money and credit now come back to reality where supply meets demand. Or the more likely outcome, which we see throughout history, is they keep printing more money to try and paper over the dislocations they've created until you have the crack up boom, which is hyperinflation. It rips the currency system apart and with it, society. That's what we're heading into. And that's anyone that thinks that, oh no, we figured it out. We've got inflation under control. It's all managed now. They have certain levers. you're fooling yourself and you're going to suffer greatly. You don't have to buy Bitcoin, but just get ready for inflation. However, you're going to get ready for inflation, because it's an unavoidable outcome of this type of a legal monopoly on money, frankly.
Where I will push back on that, and this is my personal gut feeling just from studying this stuff for a long time, I feel like as long as we have, the petrodollar, global reserve currency, in our military, I think that's the only thing that's keeping the US dollar in check. What are your thoughts about that?
Oh, of course, but the inflation still gets externalized onto the world. So actually, in that prediction I mentioned with Robert Kiyosaki, I also think the US dollar will grow as a percentage. So I said USM2 would expand from 100 trillion to 1.25 to 1250 trillion.
Mm-hmm.
The US dollar today is 20 trillion of global M2, so it's 20%. I think by the end of this decade, it will be 40%.
Yeah.
I think weaker national currencies will actually collapse and dollarize.
Mm-hmm.
But I also, in that time, think Bitcoin is going to grow to be 20% of global M2, which in those numbers comes out to a $25 trillion market cap by the end of the decade.
Interesting.
And then because the issuance rates are so high and accelerating, I think we see hyper Bitcoinization and the demise of the US dollar by the end of 2035. I think there's no more US dollars in any meaningful sense 15 years from now. I think it's gone.
And one last thing, because I usually schedule these for about an hour. We're already at an hour and 22 minutes, so I apologize. I want to be respectful of your time, but this is a great conversation. I'd love to keep going. What are your thoughts on these CBDCs, these central bank digital currencies? How are they going to integrate into the future? Do you think it's just going to be digital freedom bucks, or how is that going to work?
No, it's just a more pernicious form of fiat currency. China's rolling it out today.
Mm-hmm.
They completely control your money, and then they integrate that with their social credit system. And if they don't like what you're saying, or they don't like what you're doing, or they don't like who you're interacting with, they press a button and turn off your money.
Yeah.
So the fact that it's the possibility that we could live under a regime that can control at the touch of a button the single most important tool in your life, which is money. It's very, very Orwellian and dystopian.
Mm-hmm.
I don't think any of this holds up. I think we're going to see the state fight as hard as it can, but there's a fundamental imbalance here between open source networks and closed source networks. And the reason open source networks always outcompete is because they do not, the rules of an open source network favor users, and they're voluntarily adopted. A closed source network is pushed on people. It's imposed on people. That's what fiat is.
Mm-hmm.
And with that imposition comes a lot of cost. You have enforcement cost, and you have to protect the network from outside competitors. So you have to protect the turf. Open source networks do not accrue those costs. That's why they outcompete closed source networks over time. And that's why open source networks are eating the world. So I think central banks are fucked, frankly.
Yeah, I do agree with that. I just, part of me wants to push back because I feel like the conversation that we're having right now, and I agree with you, by the way, again, but I feel like the conversation we're having right now, it's being halved, or it's being conducted with maybe 2% of the population. I'd say 1 out of 100 people are having this conversation. You and I hear it a lot because we're on Twitter, but when you go down the street and you have bread and circus, you have Netflix, NFL playoffs, and McDonald's on the street, and people's bellies are full, they don't give a shit about the money, dude. And I feel like
they will care when it hyperinflates.
Yes, that's a big asterisk. But I feel like right now, with people talking about the Civil War and this and that, I'm like, dude, bread and circus, man. I feel like as long as people have food in their stomach, and they got NFL on TV and Netflix on TV, they don't have these. Yeah,
but they won't have the food in their stomach. When money hyperinflates, that's the thing.
Mm-hmm.
All of a sudden, you can't get food. That's why
you're waiting in line for bread.
Yeah, and you hope there's bread. I mean, eventually there's starvation, and people get really nasty. So I agree with you completely. We're not going to wake people up with this conversation. We'll wake a few people up, right?
Mm-hmm.
Maybe they wake a few people up. So that's why I think there's this quote by H.G. Wells. He said, "Civilization is a race between education and catastrophe." And that's why I've decided to dedicate my life to education, because I think, hey guys, there's a train coming. I would like to help you see the train that's coming and offer you to get on versus get run over by it.
Mm-hmm.
But most people, to your point, will not wake up until this thing explodes. And I think the US dollar is going to hyperinflate in the next 15 years. That's when you see mass chaos. That's when you see the dissolution of the nation state. very uncertain times. But in the wake of that is a new elevated phase of humanity, something way better, way more wealthy, way more harmonious than what we have today.
Yeah, I agree. So I always give the analogy to nature, because nature, in my opinion, is the most natural thing. Obviously, it's nature. It's kind of like the forest that goes through a forest fire, and the carbon, from the ashes and everything breed new life, right?
That's right.
So yeah, I think that's been prevented by non-free markets, aka bailouts for companies that speculated, and corruption and all that stuff. I mean, you and I are definitely on the same page. So out of respect to your time, Robert, thank you so much for coming on. Anything you want to leave the audience with, and where can people find more about you?
No, I appreciate this. This has been awesome. Thanks for having me. I'm on Twitter. My last name is Breedlove. My Twitter handle is at Breedlove22. It's BREEDLOVE 22. You can find links to the What is Money show there. We have it both in podcast and YouTube form. Also linked there are writings, or link to my Medium where I keep all my writings. And my DMs are open. I try to respond as quickly as I can, but I've been getting bombarded lately, so please be patient with me if you send me a message.
Love it. And one last question. This came from one of my subscribers, because I tweeted today, hey, I'm interviewing Robert. Any questions for him? And he DM'd me and he said, why did he cut his hair?
Yeah, I've told the story about this before, but to time preference, there's, in my opinion, only two low time preference haircuts. And there's either cut it all off or let it grow forever and don't get a haircut. So I let it grow for like 3 years, as pretty much just a matter of convenience, no haircuts. You just put it up. It takes you 10 seconds every day. You never touch it. Wash it twice a week, maybe. But it got so long that it became inconvenient. So I decided to go with the first low time preference haircut and just cut it all off.
Nice.
So I'll just start it over. We'll see. Maybe I'll let it grow back.
I love it. That takes me back to my soccer days when I was young. I mean, I still play soccer, but when I was a kid, we just, in the summer, front yard, your buddy shaves your head and you're done.
That's exactly what we did. We went out on the porch and just shaved it.
Love it. All right, man. Yeah. It was a pleasure having you. Are you going to the Bitcoin conference in June?
I'll be there. Yep.
Perfect. All right. I hope to grab a drink or just meet you in person, shake your hand. Thank you so much, Robert.
All right, man. Thank you.
Thank you.
Thank you for listening to the Whiteboard Finance Show. To read more about today's episode, visit whiteboardfinance.com. And don't forget to subscribe to Whiteboard Finance on YouTube. This show is for entertainment purposes only. Investing of any kind involves risk. While it is possible to minimize your risk, your investments are solely your responsibility. This show is copyrighted by Zlatic Media LLC. Written permissions must be granted before syndication or broadcasting.